Well, clearly some of this is being driven by the regulations. So, Neil, in the World Payments Report, it identifies some 32 different regulatory initiatives which the poor burdened banker has to try and pick up on. I mean, first of all, I mean, give us a sort of view on how banks are feeling about this sort of regulatory challenge. But then let's go on and try and sort of identify one or two of the particular regulations that you're concerned about, or that you even see opportunities in.
Implications. So first of all, I think you'll find for individual institutions the number is actually far higher, depending on your footprint, depending on which segments you serve, depending on your domicile, and certainly I know for our bank the number is quite a bit higher than 32. So the impact is massive. Let's be very clear, and probably unprecedented, not in the number of regulations, but the cumulative and collective timing and impact, and all kind of hitting within a relatively short time frame. I would loosely, though, group them into two areas, and to pick up on Lawrence's theme about some are more enabling, and some are clearly more compliance related. So, absolutely correct to say from a financial institution perspective, this is a shift change in how we view our business. It's a shift change in terms of moving to a completely different set of economic assumptions and economic variables that drive and run your business. And you've got a couple of strategic competitive responses to that. One of which, unsurprisingly, is this imperative to focus and this imperative to scale and introduce a high degree of standardization, industrial scale into your platforms. There is, however, a contradiction here, because a lot of the new enabling technologies actually provide for a high degree of customer, and particularly in the retail space, personalization, and the customer will drive that experience. He or she or the business that is at the end of that chain will consume the services that they want, when they want it, in the manner they want it, through the channel they want it. Yeah. And that implies quite a different set of operational gearing into your business.
Okay, so you've got to be standardized for the regulator, but individualized for the customer.
Indeed, and so there is no room anymore to be doing superfluous activities that are not core to your key strengths, simply because either the capital is not there to do it, or it doesn't meet your economic rates of return to make a profit on your business. And we are in business to make a profit. So it's an extreme rationalization, an extreme mantra to focus, but also leveraging the new opportunity of technology as it comes. It's a regulation, I think, is in a way causing that disruptive event. It's causing that moment of change, that inflection point, certainly for the financial institutions. Some are at different, very, very different stages of digesting and dealing with that. And having, as a number of us were at Cybos last week, you can see that quite starkly between the different players in the ecosystem. Some are ahead of it, some are in the middle of it, and some are, quite frankly, probably behind the curve.
Mm-hmm. Lawrence, you meet a lot of bankers. I mean,
yes, I do.
Are they depressed these days?
I think they're very pressed, and I think there is a difference between the emerging markets, obviously, and the more established markets as well. But certainly that idea of looking at the value chain end to end now, I think is something that banks are definitely looking at. So which bits are utility, which bits are value adding to me or my customers, and then trying to organize around those to make sure that when they're looking at the whole value chain, they're getting the most efficient use of it. And return on equity obviously is a huge part of it. Can you do the end-to-end value chain anymore? So absolutely, they're looking at certain ways to standardize, but where they have the differentiation for the customer, that's where the money should go. So where their utility processes, to trying to get the cost down as much as possible on those, Where they're value adding to the customer and where you have some brand differentiation or you have something that's unique to you, that's where the money and the investment goes. Now, how do you get industrialization on one hand and differentiation on the other? And I think maybe we can learn something from other industries here. And I think in banking we can learn from that. So look at some of the utility processes, get the cost of those down as much as possible, and where there is a difference in my brand or in the approach to customers, that's where I spend the money, not on the whole end-to-end value chain. So I think the clever organizations are the ones that can understand that, split it up, and concentrate on the value-adding pieces.
PayPal's nearly 14 years old now.
Yeah.
We have 117 million customers who are active. We are processing, last year I think it was 118 billion US dollars. We're not beneath the radar. The regulators are very aware of PayPal.
So tell us a bit about that.
We've deliberately applied for and secured and we operate a banking license in the European region, which is regulated by the CSSF in Luxembourg. And we also engage proactively with regulators in many of the regions where we operate. So we have a regulatory overhead ourselves, and we engage on a regular basis with government relations, with Dodd-Frank's.
I mean, are you required to conform to Basel III?
Not Basel III. Of the ones that you would talk about, maybe SEPA, Dodd-Frank's, Basel III. Basel III doesn't have the same impact on PayPal because we're not a deposit holding or asset issuing. You know, we're a different kind of financial institution, but we are a financial institution. We are subject to regulation, and I would like to make that very clear.
Okay. And in Dodd-Frank, I mean, which are the bits that you're most concerned about? Are you concerned about 1073, which is the bit that's going to affect the sort of remittance business, or?
I think 1073. Well, remittance doesn't
quite. I know it doesn't cover what you do. No, I know it doesn't.
But it's. But yes, yes, we do need to be very, very aware of Dodd-Frank and the data, the data that needs to be passed and stored. And so, but I think we feel pretty comfortable with our position and the way that we process and handle data in.
But just to be clear about this, I mean, when you say you have to engage with the regulators, what sort of things is it that they're looking at? Because they're not worried about how much capital you've got, presumably. They're much more worried about sort of operating risk and processes and things like that. Is that correct? Or?
Well, I think when we operate a banking license in Luxembourg, and they are concerned about our capital, and we do report.
Yeah.
So we do actually maintain a very healthy operating position. And obviously we have to be concerned about the regulations that have a direct impact on our processing business. Because PayPal is a transaction processing service where we add a lot of value, but we are passing funds from consumers to merchants in most occasions. And so that's where we're concerned about our regulatory status, so that we can continue to operate and innovate and be able to really add value and change the way that people use their money. And in many cases, we're doing things that haven't been done before. So, and in a way that is empowering people to do things with their money that they haven't done before. In cross-border trade is a good example. It's a significant part of our business. So you can use PayPal to make a purchase from a retailer in another country that you may never have heard of before, and you can do that with some degree of confidence because of the way PayPal operates and the protections you get. And the same applies in the reverse. The seller is able to capture transactions from someone they've never seen and have no hope of having any kind of relationship with, but they can feel some degree of comfort that this payment's going to be fulfilled. So they have, it's a new ecosystem, it's a new type of payment for both ends of the chain.
So Neil, I mean, does that impact on any of the traditional banking businesses?
It does, and I think what I'd like to draw out from Mike's comments are that there are clearly now a preponderance of regulatory initiatives which are extraterritorial or cross-border in nature. So we're no longer just dealing with national regulation, we're dealing with regulation that in some cases is coordinated and cross-border. SEPA would be a good example. In other cases, we're dealing with regulation that is nationalistic in its formulation, but actually exports a huge implication for transaction services, transaction banking businesses in particular. Dodd-Frank's a good example of that. The transparency requirements, the data sharing requirements, and are quite, explicit in that they apply universally, at least in the current version, the current draft. So that is a big challenge for the industry to take on board. And if every national regulator adopts the same philosophy, then you end up with a real spaghetti of regulation that you have to find the highest common denominator in effect and run to that standard. So I think it's the dynamic of the cross-border nature of the regulation that's particularly different or challenging in the current context. So this has been discussed, debated for a long period of time,
But Basel III haven't solved it yet, have they?
No, they haven't. But I think rational minds will come to the right conclusion here, because everybody understands trade is a principal source of economic growth, and that has to be balanced with the absolute imperative to get the banking industry back into a stronger place. And so informing that discussion and debate with relevant research, with the industry participating, and in particular not just with the banks, but also with the downstream users and the corporates part of that process is where we now need to take it. So to this point, it's principally been an FI or financial institution-led dialogue, engaging with, influencing the regulators and so forth. But we're much more powerful if we speak on behalf of our customers, and our customers are actively engaged in that debate. It is a concern of obviously different regulators will implement Basel III in slightly different ways. And the concern, from a UK perspective, obviously being part of a large UK financial institution, is the degree to which that may or may not disadvantage UK trade policy. I can tell you there are very active discussions, debates, and dialogue on exactly that theme and that issue. And we wait to see where exactly it will land, but it is still a concern.
And if we turn to SEPA, which you mentioned, we have deadlines for SEPA now, but isn't it the case that the other concern you have about differences of national interpretation is really a problem with SEPA, and the standards have not really been, the technical standards have not been even, and different countries are implementing it in different ways?
Yes, in short. No, it is an outgrowth of the fact that you are amalgamating a large number of national clearing systems, and therefore you will end up with some ubiquity, some standardization, some uniformity, but you will also end up with a residual number of unique payment types, unique clearing codes. And so this is one reason, for example, our institution has approached SEPA both as for want of a better description, a top-down and a bottoms-up exercise. So we are looking at it both as a unifier, a platform that will bring, hopefully, the national clearing systems together, but under no illusion that there will continue to be unique local variants, payment types that will need to be accommodated across the region.
Okay, Lawrence. When you approach regulation, can we sort of use it actually as a force for the banks to innovate in certain areas? And I'm thinking particularly about things like anti-money laundering regulation and sort of anti-fraud regulation that forces banks into sort of coming up with better forms of identification and security systems.
Yeah, that's a good question, Brian. I think one thing that we really need to appreciate here is the speed of change and the fact that really the regulation now is forcing, I think, most organizations to take decisions much more upfront than maybe they were doing in the past. And I think this raises that awful question of big data, but understanding, if you like, all the data in your organization and understanding really where the risk is, what's the cost of doing those transactions and the risk you're taking in doing those transactions and where you're getting the profit. And organisations now can't wait till after the event. They almost have to know as and when they're doing them. So, you know, from that perspective, we can't have siloed different reports or solutions which meet those regulatory requirements. I think we have to treat that whole data going in and out of the organisation as much more of almost a data balance sheet that you need to monitor and keep an eye on now from a compliance and regulation perspective.
Okay, but isn't the challenge that, especially when we look at European banks, you know, you have these legacy systems on the technology side, and you've got the data scattered around the organisation and in different formats, yes. Right? And I mean, some of these issues were being discussed even before the crisis in terms of those kinds of challenges. Yeah.
So I mean, if you look at us, one of the things I think we've done is we've recognised that challenge. So, you know, lots of transaction systems store data, and in the past they've moved them to warehousing type facilities. And of course there's a time gap and there's a periodicity and there's you know, you have to make sure these things are reconciled. So I think for us, we're looking at technologies like in memory now, where we can hold a much greater level of detail, almost not having to go to warehousing, so you can make those decisions at event. And I think that's where we see the market certainly moving to now, which is not really having the luxury of moving these things and doing things after the event, is actually having much more of a real-time approach to data and storing it and reporting on it at that time. So I think that's where we certainly see the markets going to move in the future.